Hey, everybody. Oh, wow, it is working. Very excited to be here today. Nevin, great intro to get this going. This is going to be a very exciting weekend. This is basically, I think this is probably a group of the foremost experts on Reserve in the Reserve protocol and the Reserve ecosystem. And yeah, very excited for not just the conversations today, but the conversations throughout the weekend. So, Nevin just went into this in great depth, so I won't spend too much time on this. But the goal is a better way to save. A thing that is not volatile like Bitcoin and is not inflationary like a dollar. So, what are we here to talk about today? What am I going to talk about for the next hour? At the first Monetarium 1, if you will. I'm very excited for this first annual, I hope it will continue to be, an annual get-together for the community and the ecosystem participants to discuss what are the important topics. Generally, I'm a very big fan of retrospectives, talking about what could have gone better, what did we do right, what did we not do as good as could have been, so that as a community and as an ecosystem, we can improve. And lastly, a quick note here. I'm going to use the word our and we quite a bit today. That doesn't mean me. It doesn't mean ABC Labs necessarily. It doesn't mean Confusion Capital. It means people that are in the community and people that are in the ecosystem. So yes, one quick logistical thing there. So, what was the strategy? What were we as a community trying to do this year? Number one, we were trying to get really big in DeFi. And that was mostly the focus in the spring. The second step here is to become a leader in the DeFi-backed stablecoin space, both in USD and ETH-denominated stablecoins, if you will. And lastly, the goal is to scale ownership of our tokens with global wallets, CEXs, which is continually the worst word to say out loud, centralized exchanges rather. And that's really going to be a focus in the second half of the year. So going forward, and some things to think about, Nevin put some big thought-provoking questions out there, and these are three more nuanced, or rather more specific questions that I want people to think about today. First, how do we get people passively holding our tokens? Are they USD-based? Are they ETH-based? Are we DTF? These are the big open questions. Secondly, we learned a lot about expanding in DeFi this year. Can we continue to do it? What works well as we continue to focus on this? How can we be more efficient? How can we be more effective in growing the usage of the protocol? And lastly, who are the most important partners for RSR holders and RSR participants in the Reserve ecosystem? What types of organizations, individuals, entities do we want to partner with to continue to grow? Is it other DeFi protocols? Is it other financial companies? Is it BlackRock? This is a big question for us to consider over the coming months, years, etc. So that was the strategy. These are the big things we're thinking about. Did it work? This is a short way of saying pretty well. It worked pretty well. How do when you get big in DeFi, what is your number one measure? It's TVL. And I think January 1 of this year, on this graph with no axes, sorry, is about right here. And the protocol grew from just under 40 million at the beginning of the year to over 235 million in TVL. I pulled this number this morning, so it's pretty up to date. There's not only a big advertising number on the screen, but our tokens are being used there's over 30 integrations of our tokens in DeFi protocols throughout the ecosystem. We know of around 20 to 30 more that are on their way in the coming weeks and months. And so our tokens are getting used throughout the DeFi ecosystem, not just to trade into other assets, but also to use as collateral and lending protocols. Even you can lend out our tokens and borrow our tokens. The level of integrations has continued to grow as quickly as the TVL in the past 6 months. What else has worked well? Almost 10% of the capital that is circulating today of RSR is participating in the protocol. That means it's being put up as over-collateralization on our tokens, and it can be used to vote. This is a pretty good number. If you look at different protocols and like what their participation is, it very much depends on the design. So like, some of the ecosystems like Curve have a higher one, and some of them like Aave have a lower one. But 10% is a great number. I'm super excited about getting this level of participation over the last 6 months. ETH Plus is the largest LST index in the entire world, which is amazing. There's actually, at the beginning of the year, there was a whole bunch of ETH indexes that came out. And ETH Plus outgrew all of them and has become the largest one. It's got a $132 million market cap. It itself is a top holder of the 3 underlying collaterals. So it's third for staked Frax, 7th for Reeth, and 30th for wrap staked ETH. That's pretty incredible. At the beginning of the year, when we were talking about this, I'm not sure if we anticipated that this would be possible. ETH Plus is actually influencing the DeFi markets for Rocket ETH, which is the second largest LST. And it's actually sucking up all of the liquidity out of DeFi for Rocket Pool ETH or Reeth, and making it hard to obtain, which is wild. This is like legitimately having an impact on the broader DeFi markets. It's trusted by large institutions for diversification. And it isn't an LST itself, but if it were, it would be the 12th largest in the world, ahead of Anchor and Crypto.com, a large international exchange. And so this has been super exciting. What else has gone well? There have been a ton of experiments launched by the community, and that ranges from individuals around the world, many of which are here today, and other DeFi protocols, other companies also, some of which are here today. And some of them have been very successful in gathering TVL. Others have been very interesting experiments, like Nevin mentioned with Mott. And there's actually one person who's here today who launched 3 of these that have over 30 million in TVL across the RTokens, which is super exciting. Another way to think about growth, especially in a market that has, as I imagine most of you know, quite a bit of volatility, is market influences, is to benchmark across other protocols and how it's doing. Nevin mentioned this already. We're the #1 index protocol in the world, and Reserve actually broke the top 100 on DeFi Llama just earlier this month for the first time, which is super exciting. I see some hands going up and down in the bag. What else has happened that's really cool? So EUSD is evolving. Nevin mentioned how, in the beginning, how he explained how the revenue of the underlying collaterals can flow to different places. It can go entirely to stakers, like it does with EUSD. It can also go to our token holders, like it does with some others, like USD3 or ETH Plus or High USD. Additionally, actually, it flows to, some R tokens have opted to have some of the revenue flow to a DAO controlled by the deployer, which is another cool use case. Earlier this month, the USD governors have opted into a new kind of revenue share, a new way to use some of the revenue, not just for over-collateralization, but also for basically marketing. Sharing this revenue with some of the companies that are using EUSD. Best Friend Finance, building Ugly Cash, is one of these companies. Sense, built by the MobileCoin team, is another one of these companies that are participating in this. And the way that it works is the revenue from EUSD is now being shared with these companies that are using and promoting EUSD, the R token, and gives them the flexibility to do with it what they see fit. And I'm not going to go too much into this because I think we're going to get some exciting news on this in a bit, and you'll hear quite a bit more about it from Gabo. But this is a super interesting experiment from the governors of EUSD, and I'm really excited to see how this plays out. Alrighty, so that was the good stuff. That's like the easy, fun stuff. What else have we learned? So, there's been some good learnings and some bad learnings. One of the things that we got right was yield and yield opportunities. At the end of the day, incentives work. We deployed incentives in a variety of ways across chains, across Ethereum, Arbitrum, Base, also using a variety of different types of tokens, types of methods, direct incentives, different types of tokens as direct incentives, obtaining governance power in different DeFi ecosystems that allow you to direct incentives in different ways. For those in the room that aren't super into DeFi, that might sound like gibberish. I realize that. But the way that a lot of DeFi works is you are able to direct incentives in order to encourage people to participate in different opportunities. And we tested out almost every way to do that, and it's been very effective. This graph is a direct result of incentives in DeFi. Another thing that we learned, at the beginning of the year, actually at the beginning of 2023, we had a community call where we talked about the goal is TVL, and TVL begets TVL. And it sounds like kind of an interesting, weird thing, but it turned out to be very right. As you break through minimum viable TVL thresholds, which is something that I'll get into more in a bit, but it makes it easier to get to the next level. It builds trust. It builds legitimacy of a protocol. Like if someone comes to you to have a conversation, or if you go to them to have a conversation, all of a sudden they look at the TVL chart and they're like, oh, that's 200 million in assets. That's a legit DeFi protocol. It makes it a lot easier to start a conversation. If I haven't gone to BlackRock and had this conversation, but if I were to go with them with $1 million in TVL in the protocol, it would probably be a pretty hard conversation. But as you get higher in the ranks of the TVL charts, all of a sudden these conversations become easier. And lastly, it builds trust in an interesting and nuanced way. It's a big bug bounty when there's a lot of TVL, and it makes it so that hackers around the world are always trying to get the money out of DeFi protocols, and the more money that is in a DeFi protocol, more or less, the safer it is, because it's been available for hacking for a very long time. And so more TVL on a protocol for a long extended period of time is actually a pretty good indicator. I want to be careful there. It's a pretty good indicator of the safety of the protocol. And then lastly, some other interesting things have been happening as TVL has grown, is that it becomes a target for other protocols that want their assets in the basket. And so other protocols have started to come to the community and try to make pitches to add their assets to the protocol. And it becomes there's a new type of incentive stream that can come in to help grow outside of the existing incentives. What else went well? We did a rebrand earlier this year. Collectively between Confusion Capital and ABC Labs, we worked on a rebrand of the reserve.org homepage. Rebrands are really scary for those of you who haven't done a rebrand. It's a challenging thing. People fall in love with the old thing, you bring a new thing, it feels weird. It's really hard to get right. And so we did a rebrand in the spring with the goal of better communicating the project in a very serious way that still shares the craftsmanship, the individual ethos that brought the brand together in the beginning. And I think it went pretty well. And one of the ways that I'm measuring that is that all of the feedback that Nevin and I have gotten has been positive. And I think if you go to the Reserve homepage today, whether you are a individual in DeFi or an individual who's just interested in monetary policy or someone from a government agency that is looking to learn more about Reserve, it caters to all of those groups and doesn't push any of them away. And so I think it was, so yes, this is another thing that I think went really well. I realize that we're patting ourselves on the back a bit here. So what did we get wrong? DAO treasuries. We had a thesis in the beginning of the year that DAO treasuries were the perfect user segment for some RTokens. And that hasn't actually been the case. We were like, so if they're holding USDC, why wouldn't they hold USD3? If they're holding ETH, why wouldn't they hold ETH Plus? Who doesn't like diversification? DAOs are entities that don't necessarily have the bandwidth to take on treasury management, and so these over-collateralized, diversified, yield-bearing assets seem like the perfect thing for them. And as it turns out, they aren't, for a couple of reasons. First of all, so minimum viable TVL. A lot of DAOs have a variety of different frameworks that they use for treasury management that, they can't have more than X% of an asset. They can't have more than X% of the liquidity of an asset. And so minimal viable TVL is a thing that started to come up and is a phrase that we learned more about that we had never heard of before. Secondly, our tokens are actually competing with an entire professional class of service providers that do a pretty good job at treasury management for these DAOs. And lastly, 80% of DAO assets are held in very big, very safe financial instruments like USDC or DAI or ETH. These have been around for a very long time, and an upstart with $1 to 5 or even $20 to $100 million in assets isn't even something that is that was considered earlier this year. And so, yes, there has not been a huge adoption by DAOs of RTokens yet. Hopefully in the future as growth continues. What else did we get wrong? DeFi is very, very mercenary. For those of you who don't know, this is a screenshot from the Athena Finance website. Athena is notable because it came onto the scene earlier this year. It's very interesting. I won't go into depth on how it works, but an outcome of Athena and actually Eigenlayer, which is the other big thing that came on earlier this year to the DeFi market. Both of these things, both of these protocols basically ridiculously raised the rates in DeFi. At the beginning of the year, DeFi lending rates were sitting under 5%. They were below treasuries. And all of a sudden, these two things came on the market, and DeFi rates shot up. Like, I'm talking then what, like the USD yield rate that people were expecting in DeFi went to 30%, give or take. And the ETH yield actually went from like 30 to 100% that people were expecting in DeFi. It sounds like kind of insane, but it was a ridiculous situation in March. MakerDAO, the largest lending platform in DeFi, raised their base rate to 15%. That's crazy, right? Like the treasuries were at 5.5%, 6% at the time, and the DeFi market was just going insane. And so DeFi is super mercenary. And the reason I'm talking about this actually is because one of the RTokens that we thought was super interesting at this time. Let me explain a little bit how it works. The RGUSD or RevGen USD is a really cool idea. It's a RToken that isn't entirely backed by savings DAI, which at the time had 12 to 15% yield. And the idea is that 95% of that yield would be shared as a DeFi incentive to encourage the usage of this. The problem is, 12% you share it in a decentralized exchange. That means anyone that provides liquidity gets 6% yield. That's basically the treasury rate at the time. That seems like a no-brainer, right? But the problem is that the rates were at 30% for dollars at the time. And as DeFi rates then go down, so does the yield of this. And so the challenge was that this product that was offered would never be competitive. And so this is an idea that we spent a lot of time on. We put a decent amount of incentives behind to try to help grow it. And it was a really exciting and interesting idea from the community, but it didn't really work and it didn't take off. And so, why am I talking about this? I think it's important. I mentioned this in the beginning, but I think it's really important for us to, recognize the things that work and recognize the things that don't work. This is something that we're no longer helping to grow and helping to incentivize. It might still work, but I think that the yield mismatch could hurt it. So what else did we get wrong? We underestimated how hard integrations would be to get. In January of this year, the community, there were a variety of different community conversations, internal team conversations. We were discussing, okay, we're going to get RTokens integrated. We're going to talk to these protocols, and then it'll happen next month. It did not happen next month. It took many months for this to get going for a variety of reasons. We underestimated the difficulty in getting oracles. Not only was it hard to get the oracle, but to get an oracle, you actually need certain types of liquidity for these assets. And then, okay, great, you get the oracle because you finally get the certain type of liquidity for the asset, but then actually you need different types of liquidity for lending markets. And so there's like all these kind of hidden things that you don't anticipate that continue to come up and made it challenging to get the DeFi integrations going. Eventually, though, we got over our hindsight and we were able to get the ball rolling, and we saw DeFi integrations start to take off in April, May, and June, really, where they picked up steam. And like I mentioned earlier, now we're at 30 integrations for RTokens throughout DeFi, with 20 to 30 more on the way in the next couple months. So, a lot went right, a couple things went wrong. What are we thinking about next? So, can we DTF? Along with Chamath, BlackRock and Goldman are now in the arena on the real-world asset space. The interesting question for us here today and for us in the reserve ecosystem is how can we leverage this and take advantage of it? And what do we need to do to unlock this? There's a couple logistical things. We have to navigate the regulatory landscape. At the end of the day, a lot of these things are securities. And so we'll need to figure out how are we going to make it so that the protocol can interact with these. It likely means that one particular way that we could do it is to bifurcate the UI for different regions in the world to have access to these types of RTokens that might unlock these types of things. There's also a variety of new tokenized assets that are real-world asset that offer real-world asset exposure. And so collateral plugins need to be written for these and built and tested and audited. But there's a variety of things that can happen. There's also the narrative question of how do we let people know that these new types of things are available, right? The community at large needs to figure out, okay, so SP500 RToken with a mix of Bitcoin and these other things. Growing RTokens is hard. Growing ETFs is hard too, right? There's all kinds of different things. I have a friend that grew ETFs at a traditional financial advisor, and he was telling me how getting from $1 million to 5 million is really hard, and getting from 5 to 50 is really even harder. And the real challenge is getting above 50. And once you get to 200, it's actually easy. And it was really funny. He was telling me this, and I was like, holy smokes, does that sound exactly the same as growing an RToken? So yes, number one, can we DTF? Number two, how do we get more people to passively hold these things? Our tokens are being used throughout DeFi for the most part right now, mostly as a result of incentives. And so how do we promote more passive holding of our tokens? How do we understand what people need in order to use these for preserving their wealth? This is a big question, right? What's stopping you from putting your savings in our tokens? This is a big thing that I'm actually excited about to talk more about this weekend. And lastly, I mentioned this earlier, but who are the most valuable partners? Who are the most valuable additional RSR holders that would really unlock growth in the ecosystem? Some of the, like Ugly Cash, for instance, is super aligned and has been, and again, they will get into this more, but they are using USD in the app and it is powering the app. Sense, likewise, is using USD and it powers the app. What are other groups that would be valuable partners for RSR holders? And so we talked about what went well. We talked about what didn't go well. We talked about the big questions for the future. Now, how can we all get involved? Use them. We all got to use our tokens. And so use them in DeFi. If you are a DeFi participant and you see an R token on a lending market as an option for collateral, please use that if it makes sense. If you see it as the option for lending, or if you see it in a DEX, or if you want to hold your savings in a US dollar denominated thing, explore R tokens as an option. Do you have a friend who's building a fintech app? Do you know wealth managers that might be able to benefit from our tokens or particular things on the platform? Send them our way. Talk to them about our tokens. Talk to them about the Reserve Protocol. Try to get them involved. Try to understand why they might get involved, why they wouldn't get involved. Participate. Participate in the ecosystem. There's two big things that happen today where it'd be great to have many more participants than there are. One is in governance. There's a variety of different governance votes that come up if you are a RSR holder or you're a RSR staker and you don't know about the governance process, please let me know. I'd love to understand better how the community can help make that process cleaner and smoother and clearer for everyone that is involved or should be involved. Help make decisions on what should be in the basket of our tokens. Help make decisions about upgrades or try to get the information to do it. The other thing is auctions. There's, every time a basket change happens or every time revenue is being sent around to different places in the protocol, all of the trading that happens is actually from auctions. And it would be great for more participants to get involved in those auctions so that revenue can flow more smoothly and so that basket changes can happen more smoothly. Use Ugly Cash or Sense. These are apps that are powered by our tokens. They're powered by USD. I think Ugly Cash is a much better daily experience than on-chain. I don't like to carry a Ledger hardware wallet around and pay at the store. I also don't love the public nature of Venmo. And so, I think Ugly Cash and Sense are great alternatives. If you don't want to do any of these things, please tell us why. This is a legitimate ask. We want to understand if you don't want to hold your dollars in our tokens, if you would prefer to have them in a savings account, why? If you don't want to, if you hold a lot of ETH and you don't want to use ETH Plus, why? What are the things holding you back? These are things that the community needs to continually understand so that we can evolve either the protocol or the R tokens that are available and continue to grow and gain adoption. So with that, this is a lot of fun. I'm really looking forward to the conversations for the rest of the weekend. Some of the questions that I posed up here will be some of the topics that I plan to put on the potential roundtable board. So if you want to discuss those, come find me or come find that slot on the board. I don't want to break the process. And yeah, thank you.